All right. Hey, everyone. Glad you made it here to lesson one. So on lesson one, we're really going to focus on the weekly and the intraday cycle. So we're going to really focus on cycles themselves. And this is going to kind of build up your foundation for being able to trade this strategy effectively. Is always know where you are in the bigger picture, right? What's happening in the cycle, right? This is the one part of the strategy where everyone seems to fail, is counting the levels and understanding where you are in the cycle and how to calculate the cycle and things on that end. So to start the lesson, I have a quick video that I want to show you guys before I actually go into my charts. And then we're going to just really dissect cycles in real time. And I'll just, go through chart and chart and kind of show you in real time, because I feel like this is the best way how to do it. So, so weekly cycle. So it's a cycle that starts on Monday and ends on Friday, right? Market makers will mostly trap traders on Monday. This is called the false move week beginning, where everyone is back on their screens and is expecting a high productive week. Okay, so we'll get more into that, but there's something called the false move week beginning, and this will all be in the slides as well. So with every lesson, I'm going to provide a ton of different slides. So these slides will cover all the technical terms when it comes to moving averages, market timing, using the TDI, it's going to cover all the more technical and in detail things, so you can read and study the slides as you kind of play along with my videos. So this is how I want it to be structured, okay? So let's continue with the video here, of course. So market makers, so they make a stop hunt, right? So a stop hunt is to induce traders to take the wrong direction. We should all know that, but we're going to be getting into stop hunts pretty soon. And they basically stop hunt basically if they are aggressively moving price to the downside with 3 aggressive spike candles, vector candles to the downside. Then their real intention is to actually move the pair to the upside. So they're trying to get traders to induce and take short positions, and then eventually say, ha, I got you, that's the wrong way, we're going to turn against you and go long. So let's just continue with this video here. I'll try not to pause and stop too much. This method has 3 stages. So we have accumulation. This is where the market maker will accumulate their contracts. This is the market maker spread. This is the Asian session of each day. This is their spread. I'll show you this later. Manipulation. This is where the market maker manipulates price against the traders that he has already trapped. And this is basically where he's going to create his stop hunt. This is the phase where he creates a stop hunt. And then we have the trend release, which is going to last for 6 to 8 hours. This is where he releases the trend in the correct intended direction after all the stop losses have been hit from the retail traders, and he has enough money to go, say, long, right? So Forex, it's all about where is the money. It's a business of the money flow, right? So if the market makers see that, for instance, that going into a, let's say, so basically with market makers, there's market makers in Asia, market makers in London and New York and Singapore as well. And there's gap time, which I'm going to go through over the gap time in the timing elements. You'll have that on the slides as well. During gap time, it's 30 minutes. Market makers in Asia, after Asian session, will go on the phone and call the market makers in London, and they're going to say, okay, we have 500 million contracts going long and only 200 million going short. So what they're going to do is, okay, we have a lot more contracts going long, so let's actually continue to go long, and let's really rack up all the volume and money, because that's where the money is, going long. And eventually when we get enough contracts and enough volume, then we're going to stop hunt against them and go short in the real intended move, okay? So I will be teaching all that. Okay, so here's a weekly cycle. This is a typical week. So right here you have Sunday, which is your accumulation for the week. This is your initial induction. right here. So this is our false move week beginning. Okay, so this is what I mean. So Sunday we have accumulation, yeah, and then they're gonna okay, so every week comes with new targets for market makers, right? New week, new targets. So know that when you're coming into Sunday, that you're expecting them to create a false move week beginning. So whether it's 100 pips or 50 pips to the downside, they're going to create some type of induction for the week, which is to catch all the breakout traders, right? If breakout traders are playing the strategy where they break out of the initial Asian session or breaking out of a structure that they created, note structure, breakout traders sell. Now, this is just as an induction, false move week beginning, okay? So then we have Monday here, and then eventually we have a stop hunt low to get all the orders, and then we have a rise, then we have a level of consolidation, then we have another rise. This would be level 3, and then we have a drop to end the week, exactly almost where we started for the week. I'll get more into that, but there's different ways to identify the cycle. And the cycle doesn't always end up like this. Okay, has 3 different templates that he follows, but variation on the theme tells us that it's not always going to be picture perfect, because if it would be picture perfect, then it'd be too easy to spot. Okay, it's there in front of your eyes. So it's been happening there in front of your eyes the entire time, but you just aren't trained to see the patterns in the cycle. So you never see it with your naked eye unless you're told that this happens. Okay, at times he may trap on Friday, setting the bait for Sunday, Monday. Okay, so he does this so that on Monday he doesn't start on an empty slate, but with traders trapped from previous session. So already holding volume over the week. Okay, and he didn't make it obvious, because you're not trained your eyes to see this. So let's take a look here. This is GBP USD in June. As you can see, we had our Sunday right here, accumulation, and then we had our initial induction. Very similar to what I showed you on the ebook as well. And then we had our intended level 1 of drop, level 2 of drop, and then level 3. And here's our reversal, Thursday going into Friday. Thursday and then Friday we end the week. Up here in consolidation. Okay? And note that market makers will begin the week, accumulation phase. He's going to analyze the books and see how many contracts he has and which direction he needs to go to grab the most money. So here's the 500 million long and 200 million short. Okay, so you guys can pause this as well on your end, but I really want you to understand this. Now look how similar these look. Look at this, Sunday accumulation, initial induction happens on Monday. Then we have level of consolidation, drop, 3 levels of drop. And then we have a reversal W formation. Notice M formation, W formation. That's why we trade M's and W's, because that is part of the reversals cycle. This M's and W's is the foundation of market makers method. Anyways, do they look familiar? Yes, they do look familiar, right? Okay. Now, right here as well. So what's going on here? Okay, so we had Sunday, Monday going into here. We had our initial induction up here. So let's just let the video play for you. There is Monday, there is Tuesday, Wednesday, Thursday, and then Friday, we end up back into consolidation. And notice how it's not too obvious, but if you're not trained to see it, you would never expect it. But if you're trained to see it, then that's where you start to really see the patterns unfold. And this is the most important part in terms of catching the intraday setups. Now, the same thing is happening vice versa, and another week and into consolidation. So understanding this structure like this is going to help you understand this. Very, very important stuff here, guys. okay? And try it on your charts on the H1 to see if you can spot the pattern for the week, okay? So okay, guys, so we're here on our charts, and I really wanted to kind of, show you guys, how this works in terms of the cycle. And I want to kind of show you that, so what you just learned like that is, okay, so that's the cycle, but those are picture perfect cycles. What happens when price consolidates and it doesn't move, right? What happens when you can't calculate things on that end? So the way that we initially, this is going to be the cycle. And then in the next lesson, I'm going to really dive into each and every indicator once we go over the cycles, because I want you to understand the cycle first. Okay. So now coming into this, this trade right here. So what I'm going to introduce to you guys here is the PSR, which is the psychological support and resistance. Okay. So how we put the PSR on is as follows. So you come here in the first Asian session, the Asian box, first one of the week, we box off the Asian session, okay? And what you will notice here is that what happens is we need to see our initial induction for the week, okay? So we want to see the initial induction for the week, not to mention our TDI outside volatility band, back inside. Okay, we're not going to cover that right now, but this is our initial induction with this pin bar almost to our stop hunt box. And then we're going to rise for 2 days. And this is our midweek reversal. Okay, now this is what I want to show you guys is, so what I told you before is, so we know this is a peak formation because we had our initial induction for the week, and then we expect 2 to 3 days of rise or levels of rise. And then when we have the indications of a peak formation, so count level 1, level 2, level 3. Okay, now we have 2 pins to our stop hunt box exactly at our 800 EMA, which is our blueberry. Okay, now look at TDI, outside of volatility band, back inside. This right here is our peak formation, and then how we go about counting the levels. Now we know that this is peak formation. As follows is you don't quite need to calculate what day it is, as this is midweek reversal, but we count the levels, and this is, so I will teach you obviously more about this, but it's going to be, go here and get the annotation tools out, is that the cycle on a bearish trend is going to be as follows. M, A, W. Okay, and for a bullish trend, it's going to be W, V, V, M. So what I mean by this is that for the M formation is that there is an M in here. If you go on the 15-minute time frame, there is an M in here at our peak formation. Then what you expect is a stop hunt high drop, which is our A, right? Then we expect another A, stop hunt high. Get the drawing tool back here. Okay. Stop on high and drop. Here's another A. And then eventually our W reversal. But I'm going to show you something that's very, very interesting here. Now, with this cycle is how do we calculate this as a proper levels of drop and levels of rise? So we could box it off, and this is how Steve teaches, or this is how you teach in DMR, if you're familiar with that, if you guys are not new. to Forex is once you calculate your peak formation, now in a bearish cycle, the levels of drop are the levels. So the aggressive moves to the downside is what you see in a bearish cycle. And then the moves to the upside are obviously the consolidation, accumulation. So we have a aggressive move down, level 1, a level 2, aggressive move to the downside. So this is 1, 2, an aggressive move to the downside. 3 aggressive moves to the downside. So with this all being said is, okay, so what is this PSR, psychological support and resistance? Now look at this right here. Remember how I said that beginning of the week, you always want to place your PSR there because you want to see the proper induction for the week. So this is our Asian session, our Asian box, which is aligned with the proper times. So you draw your PSR off of the Asian session like that, and what happens here? Our false move week beginning, notice how the TDI is completely near the 37 and 32, right? Near the 37 and 32. And we have outside the volatility band and back inside the volatility band. This is a peak formation anchor point. So many things here, and our ADR 3 times 251. If we measure from this peak to this peak, it's about 280, so 30 pips off, right? 3 times ADR basically means the average daily range is the ADR. I'll get more into the technical terms. All this stuff will be on the slides that I always will tell you to read. The slides, and you combine it with watching these videos. This is how you're going to get the most out of this course, okay? So with that being said, let's actually clear everything. And like I said, we had our PSR here, and we had our W formation, and then level 1. But then what comes here is very interesting. This is a reset. Now, a reset can happen when we're in a bullish cycle. And what we really expect in a bullish cycle is a stop hunt low rise, right? V, right? So we expect V, V, and then M. Interesting enough, a reset, what a reset is basically when price opens for the day and closes that day almost at the same price points, but we have a stop hunt high and a stop hunt low. Or if we're in a bullish cycle and we see a stop hunt high in a bullish cycle, that's a reset because we expect them to stop hunt low and rise. Okay, so initially, if you guys can catch the reset, is okay, look what happened here for the day. So right here, this is a reset as price did open and close exactly almost the same price point, but we had a stop hunt high above the Asian session, above the blue tracer, which I'll get into, and a stop hunt low to the stop hunt box. Look at that. And a reset, usually since it opens and closes at the same price point, doesn't count as a level of rise, but we have, come here, let me annotate this, get my drawing tool here. Day 1 of rise, day 2 of rise, the reset, And this is the additional day of rise. Notice that we have from here, from the peak, 1, 2, 3, fourth day of rise. Are you kidding me? Fourth day of rise. We're looking for the reversal. Okay? And what do we get here? We get a M formation with this spike right here grabbing the orders right above the blue tracer. The blue tracer basically shows yesterday's high. So yesterday's high is right here, right? Yesterday's high is right here. The blue tracer shows yesterday's high. So, for example, this is yesterday's high. The blue tracer is drawn there for the day. Does that make sense? This was the high for that day. So the blue tracer draws right there. So now that we understand these core concepts, now let's actually start coming here and looking more in the cycle. So let me clear these annotations for you. Let's clear all drawings. Whoops. Sorry about that. And let's come here. So now let me show you something as well. So we came here with this reversal on Euro USD. We're all looking at the 1 hour chart. The trades here, if we're looking November 12th to November 20th, let's take a look at the 15-minute time frame. Okay, so before I show you how to catch the peaks actually, so knowing all these indications to catch the peak formation, then you actually start looking at your 15-minute time frame. But first thing is you always want to catch the peak formation. 1 hour chart. This is how you find where you are in the cycle. So once you saw that this anchor created, look at this, TDI, right? TDI, you'll learn more in the slides, right? Slides are going to be powerful, guys. Watch my slides. Read through them. All right, let me get a drink of coffee. Yeah, it's 9:48 p.m. and I'm drinking coffee with 2 espresso shots. I know, it's bad. But I want to get this video out to you guys. So we had outside volatility band, right? And back inside the volatility band, basically when this happens, that means it's catching the stop hunts. But not only that, when this happens, it means that they opened up the spread here, and that on this second leg, they're tightening the spread. They're closing down the spread, and they're calming price down, right? This is the TDI is based off of the RSI calculations. RSI does not lie. It's based off of closing prices. So with all this information I'm giving you, this is how we catch the peaks. I don't care about the 15-minute time frame. We can come in here and take a look at what it was in the cycle and hone in and catch the trades because we had our peak formation locked. Now what we're looking for is for the stop hunt low and rise. So initially, once our peak was locked in, what we expect now is only stop hunt low rise because we're trading in line with the peak to the upside. Okay, once the peak has been created, we only look for trades in line with the peak for the remainder of the cycle. Otherwise, if you're going to take M's up here, DNC, do not counter, you will lose money. And this is not what I want to teach you. Coming into the 15-minute time frame, let me just show you. I know you guys want to see this. I'll tease you a little bit. I'm going to continue with the cycles, though. That's the most important part. Then what we see here is our Asian session is below 50 pips. Like I said again, the slides. Okay? Is below 50 pips. Okay, cool. So with that being said, now what we expect them to do is break the Asian session and hit stop hunt low and rise. Now, this wasn't much of an aggressive stop hunt, but what we kind of see here is quite interesting. Coming here from this pin here, at the end of the Asian session, we have one candle, that's one push to the downside, and we have two, and then we have three. So notice how we have three, one, two, three pushes to the downside. Look at your TDI. It's outside the volatility band, right? Look at the TDI. Outside the volatility band, back inside, perfectly at the 37 and 32 point. Then we have our W formation. It's in there. And look, entry is right there. Let me zoom in. This is where I drew this. Don't mind that. Look right here. I need to clear this actually. So, and look at this candlestick right here. Is that when this one goes inside the volatility band, we have an additional spike right here. It goes just below the low of the first leg, right? We only take second leg entries. Once again, in the slides, we'll be saying that a lot because the slides will be very important because I'm not going to go through the slides right now. I want to show you the charts. And I assume that you're going to know everything, things I'm talking about, by looking at the slides. Then we have a nice bullish candle right here and additional confirmations with the EMAs, which I'm about to get into after I go through the cycle part, is the EMA cross happens right here, but by then it's already too late to enter. But you know that this is a stop hunt, and you know that you're looking for a stop hunt low rise. This is V1. Then we have V2 over here. V1 and V2 is basically WV1, V2, M. That's where I get that from. So enough of that intraday. Trust me, we'll get back more. We'll get more into that. So initially, then let's take a look right here. Okay, so what happens here is interesting as well. Look at this, November 16th and 19th. Can you see here? This is the first Asian session of the week, right? You box that off, and what you expect is an induction. Look at this induction, actually. Previously, you had 1, 2, 3, 4, 5 days of rise. So you're already expecting a drop. And on top of that, you had your PSR, psychological support and resistance, and the induction, right? Go back to the PDF, go back to my ebook. Look at the initial induction. It happens every freaking week. And not to mention a beautiful M formation that you take this. On the 15-minute time frame, you can see a nice railroad track there. I still remember this trade. So with that being said, your PSR, initial induction, this is your M formation, you go in there. Now, let's take a look at this. Okay, so this is your, right, your M formation that you get in here. Second leg entry off on the 15-minute time frame. You know, I'll just show you guys. But now this is what we look for, okay? So initially, we had what? So we had aggressive move to the downside, 1. Aggressive move, 2. And then a nice move, 3. 1, 2, 3. And look at your TDI already. Outside volatility band. This is a cord of wood. Watch them. Look at that, manipulating the price that they're holding and accumulating contracts. And then we have it off of the market baseline. I'll show you how to use TDI more once we get through the weekly cycle lessons. Okay. So now when we come in and we actually see price behave like this around the mayonnaise, around the 200 EMA, and when it's just playing around the 200 EMA and the EMAs are not getting fanned out and we don't have proper cycles. This means that they're moving the crosses and holding the majors. So initially, when you see choppy price action like this, and you have no significant idea of where the trend is going, right? Look at our 13 EMA right here. When you see the 13 EMA is squiggling above and below like this around the mayonnaise, around the 200 EMA, and it's just kind of going through like this, these are all resets. And this is price action that we don't want to be getting ourselves into just because as there's other pairs. But that doesn't mean that it's still not tradable. It is tradable. Like, for example, these pins to the stop hunt box calls for a great trade. But at the same time, during this week, we can be looking at other pairs that present cycles that I've just showed you that happen day in and day out every single week. So let's, for example, now go into, say, Euro NZD. Go to the 1 hour. Have some very interesting points to cover here on Euro NZD. So one that I really like to look at here is let me scroll back and to truly show you this. So Euro NZD seems to really play out quite well most of the time. So this is our look back, right? So how do we determine this? How do we go about looking at this as a new week? Okay, so we always take our charts and we hone it in on the 1 hour time frame on this selection, and we want to see, okay, what was happening? Let's say we're right here. So previously we had our peak formation up here, and we had multiple days of drop. So we've been dropping for the past few weeks. Okay, not to mention that you draw out your PSR, psychological support and resistance, boxing in the first Asian session of the week. And now you're really into, okay, well, what am I expecting? We had multiple weeks of drop already, and look at the TDI. It's already showing signs of reversals outside of volatility band, back inside, but we're not quite done yet. We wait for false move week beginning, go to the downside. We're going to come back and consolidate, and this is where we get our pattern. Can you see this right here? This is a W formation right here. There's our W formation right here. Sorry about that. And one thing I'm going to show you that's very interesting is the way that you use TDI as well, bouncing off of the market baseline like that. Is very, very powerful in the slides and in the ebooks as well. Sorry, we'll be saying that quite often. Anyways, we had 3 hits to the low right here. And let's take a look at this cycle and how it unraveled, right? And what I really want you guys to start doing is take screenshots and study these cycles as well. So we had our PSR right here, and then we had our false move week beginning, okay? TDI already showed that it's to the downside, but there's no quite confirmation here. Obviously, it's still Sunday, Monday Asian session. This is our accumulation phase. So then we had a hit to low, and we had a railroad track right here. Okay, so we see something, okay, but it's still nothing quite significant, right? Then we come here, and we see these 2 pins test, and we have a W formation off of the market baseline. So is this the induction? Yes, of course, it's in the induction is the pattern, timing, and the levels. Okay, then we had one more test to the downside. If the dealer hits the low or hits the high 3 times in front of you, that's lights out for the dealer. Don't allow him to hit the low 3 times. If he hits the low 3 times, punish the dealer. Get in right there with big contracts. Okay. So, and then we move through the PSR, and this is where we have our longer term cycle. You can clear all these drawings now. So hopefully you can see exactly how this unfolds. Then we have our aggressive moves, level 1, level 2, and level 3. So everyone see that right there is I want you guys to start counting your levels. So we have level 1, aggressive move, up. Level 1. There's our level 2. And then there's our level 3. And then what we have here, well, what does it look like? An M formation. Look at TDI, M formation. Okay. That's 1, W, A, 2. There's our A2, A2. But this is our third level of drop. And then W formation. Look at the TDI outside the volatility band and back inside at the 37 and 32. This one right here was at the 68 and 63, right? So I hope that you guys understand this. I'm going to do another video clearly on this, and it's going to be one more lesson on the weekly cycle, and we're going to get in more into it, some more few pairs, and we're going to continue to work through this. Might even do for 2 more lessons. And then I'm going to get into using more of the EMAs, the system, using more of those things, and then slowly start to progress the anatomy of the candlestick patterns of the M's and W's. And eventually is, once you're able to catch the peak formations, the weekly cycle, then that's when you get on the 15-minute time frame and you watch for the same thing, what you expect, stop, hunt low, give us a second leg of a W, the TDI shows what it shows, and that's where we catch our sniper entries. This is how you see that I catch sniper entries on a daily basis, on a weekly basis, is I understand these concepts. Okay? I'll see you guys in lesson 2, which is going to be the cycles continued. Thank you.